morning, everybody. It's Michael Oana, and I am a certified retirement counselor and owner of Michael Oana, Retirement Planning Specialist. We're coming to you this morning from Sound and Images, and our friends at Zero Gravity are producing this great interactive experience. It's an honor to be here. Thank you so much for giving up some of your time this morning to join us. Joining me today live is Chris Burnett. Chris, good morning. How's your day coming along?
Good morning, Michael. Wonderfully. So excited to be here to speak to our clients here in 2024.
Well, excellent. Onward with the show. Our part of the presentation today is the opening act. We're here to get you excited, to get you thinking about the year ahead in the economy and our chilly economic forecast. Speaking of chilly, Chris, what do you think about the weather today?
Well, here in January, it is quite frigid, and a good bowl of chili would help warm us all up.
I asked the production team if we could have chili this morning, and they weren't quite sure how that would go over, so we elected to pass on the chili this morning. Traditionally, we'd like to do these types of events live and in person, but the weather in Columbia is so unpredictable in January, we're really never sure. Last year, we were at the Nickelodeon Theater, and we got sleeted on. So today, we decided to go inside for this wonderful presentation. Also, for our families and clients out of town, it makes for an easier event. A little bit about the organization. I've been a financial advisor for 31 years. I've owned the firm for 18 years. We're based at 4408 Forest Drive, Suite 2001, and we have an awesome clientele of 446 families. It's an honor to serve you and an honor to help. Chris joined the team going on 2 years ago to play the role of the financial advisor, and Chris and I are going to have an interactive discussion to tee up our keynote speaker. So Chris, thank you for your work on the team, and it's been a pleasure to have you. As we think ahead this year, what's your take, and give us your idea as far as where you think interest rates may head this year?
Well, Michael, we saw interest rates go up to the highest rate in over 20 years. We do expect the Federal Reserve to lower those rates numerous times in 2024, which means that we could be facing some volatility in the marketplace. So I would advise caution to our clients because of that volatility. But as financial advisors, we manage risk and we're prepared to help you with that.
Chris, thank you. With all of the headlines, folks tend to get upset about short-term happenings, short-term items in the economy. Should we be focused this year on short-term headline, or should we think about maybe longer-term strategies?
Absolutely longer-term strategies. It is important that we do remain vigilant on the economy. However, we're in this for the long haul.
Excellent. Last year, one of the concerns was inflation, and inflation was sky high, and it cooled off economic growth. Matter of fact, I saw an article yesterday in the Wall Street Journal that said real estate had its slowest year in 23 years. What impact do you think inflation might have this year? Do you see inflation going up or down? And what's your thought on interest rates going into the future?
Well, Michael, I believe that inflation has certainly been curbed. It could go back up due to increased government spending. However, I don't think that we'll see the rate of inflation that we saw the last 2 years. As for interest rates, we do anticipate those to drop this year.
Excellent. As we think about this year, the economy doesn't, and the stock market doesn't always go up. As the economy tends to ebb and flow and the markets go up and down, how might an investor take advantage of the ebbs and flows, the ups and downs of the market? Should they wait till the market goes up? Or give us your take as far as what an investor might do this year to take advantage of the ups and downs of the market?
Well, Michael, whenever cash is available, it should be invested. Don't wait to take advantage of dips in the market, betting that it's going to dip. The best way to handle it is to dollar cost average and contribute monthly.
Excellent. Chris, as we think about this year with things going on, should investors tend to put their money into limited investments, or as an organization and with your many years of experience, how should one diversify their portfolio for the long term with these type of markets?
Well, Michael, a diversified portfolio is extremely important. In fact, asset allocation contributes to a large percentage of growth for investors. So a portfolio consisting of stocks, bonds, and alternatives is important.
Excellent. Chris, thank you so much for joining us. As we tee up our next guest speaker, when Chris and I were getting organized to plan the recipe for chili, we had a couple of thoughts in mind. What we've noticed is that for a large swath of our clients, they're concerned that the bank once didn't pay much interest, now maybe pays a little more than to be expected, and the concern is that people might over-allocate money just keeping it in the bank. With interest rates on the way down and bonds and other fixed income investments looking opportunistic, what are your thoughts as far as strategies or items that our clients should be looking at this year?
Our clients need to be discussing bonds with us. The fixed income sector is expected to do well over the next 4 to 5 years. There are plenty of opportunities, but don't try to do it on your own. Seek the advice of a seasoned professional.
Chris, thank you so much. One of the many advantages that we have in our organization is being an independent firm. We have a breadth of services and we have a breadth of authorities that we work with. When Chris and I were planning our event, we thought that it would be important to share with you someone with great knowledge in fixed income and bonds. So we're going to have one of our top professionals with Prudential that's going to be joining us here in a couple of minutes. We thought that it would be important with everything going on with interest rates, everything going on with in inflation, that we bring in an authority that knows a lot about where bonds are headed, where interest rates are headed, and where fixed income. So we thought that for this presentation, we would bring in someone that was very knowledgeable in those areas. Chris, as we get ready to tee up our next speaker, tell me how you like your chili.
I like my chili spicy and with lots of ingredients, just like a great portfolio.
Excellent. And one of the takeaways from our talk today is that everyone likes a different style of investing. Some folks want to be conservative. Some folks want to be aggressive. When you think about designing an investment portfolio, it's a lot like a recipe for chili. Some folks like to spice it up. They like to put in individual equities. They like to put in commodities, options, and futures. Some folks don't. So our job is to build a good chili recipe so that people can enjoy and that the chili has the right level of spice. If you put in too much spice, you may get burned. Me personally, I love chili, but I might be the only person in America, especially in South Carolina and Texas. I don't enjoy beans with my chili. It's a long story. We'll have to meet up one night for happy hour, and I'll tell you the reasons why. Chris, before I forget, how's your family doing?
Family's doing great. So happy to have my wonderful children and looking forward to a fantastic 2024.